Welcome to TheoTrade. This is Don Kaufman. May 12th, 2021. 7 minutes to go to the cash close with some absolutely huge movement inside of the marketplace. People, it's getting downright serious out there. Here is what you need to know moving forward. Presently, I am happy to be watching none other than the Nasdaq futures, which are, again, extending their losses, literally in the last couple of seconds here, extending their losses in a very, very large way. The last 5 minutes, we've had about a 50 to 60 handle move. Nevertheless, the selling does not seem like it's going to abate as we are looking at volume picking up throughout the course of the marketplace. Again, this bell cannot go off fast enough, but let's get to work and actually detail, all right, some really critical points moving forward. First of all, I'm kind of off the beaten path, right? We're actually going to cruise to the bottom of my screen and look at the VVIX. It's downright serious right now. In fact, if we open up even to a 3-year, the move that you're currently seeing in the VVIX, this is the volatility of the volatility index, okay? This one is literally screaming, duck and cover, get under your desk, all right? We talk about the VAMA zone, and that's anything north of 110 region, 110 region in the VVIX. We're a clean shot right now all the way up, okay, to 150. There's only been literally a handful of times since the inception of this product, okay, that we've actually had readings this high, just to kind of give you a feel, right? That cannot be overstated at this point in time. As I said, it's getting kind of serious out there, and I just want to deliver to you how serious, all right, are some of these implications. For the most part, look at the number of closes that we've actually had above the 150 level, because I'll tell you right now, you can count them pretty much on one hand. All right, back to the broader marketplace. Again, we are seeing complete asset flush. It is very likely we're going to see the Nasdaq down now. All right, again, that's statistically significant numbers, about a 3% move, and the Nasdaq is flirting with it presently. All right, after we go through the VVIX, well, then we want to go over here. This is the S&P 100. It is correlation coefficients. We're home. So if there's going to be degrees of capitulation, it can only be done, all right, when we're actually seeing, for instance, well, 92 products trading to the downside. I've been talking about this incessantly. You would actually feel the marketplace literally like it was going to snap when we had higher correlation coefficients, because here's the bottom line with correlation. You can't have capitulation in a marketplace until you see higher degrees of correlation. So this is a critical factor. And you can look at this as both a positive and negative, right? It's a full court press. They are selling everything, no holds barred. But on the other side of it, okay, now we actually have a chance for degrees of capitulation and the possibility even of a bounce, simply because we've had higher degrees of correlation. All right, next up on the docket here, you got to cruise back over to charts. Okay, if we take a look at something like the Nasdaq, it's evident that there's being some huge damage done now. All right, if you looked back just 2-3 days ago, it was a scratch against the surface. Okay, today's trade though, again, it got downright serious. Volume is picking up. One of the best ways to kind of delineate this though, this is to look at a 30-day 1 hour. And this is not meant to kind of intimidate. I'm literally going to freeze the screen with like 3 minutes to go. This is not meant to intimidate, but we still need more sell side activity to even get back to where we were approximately 30 days ago. And again, I wanted to give some perspective on that, because before you start high-fiving everybody and you're like, oh, this marketplace is getting killed, right? Come on. Getting all the way down to 12,500 doesn't even take us back to where we were, for example, in early March. So perspective over here, you might look at this and you might think, hey, that's some extreme. Listen, it is. It's some heavy sell side activity, okay, for 1 or 2 days. But that does not state that this cannot just continue. And again, things could get downright hideous from here. All right, to state the obvious, clearly volatility has had a spike. Now we talk about volatility, and you look at the volatility futures, you can look at this to your blue in the face. You can look at the VIX and actually quantify that the VIX is up to the tune of almost 30%. It's not going to help you. What you really want to focus on right now is what we term contango and backwardation. So forget for a moment that the 7-day volatility futures even live. Doesn't make a difference, because the 7-day volatility futures are just ultimately going to be in an lockstep arbitrage with the VIX. The volatility futures that you want to focus on here, again, just moments left in the trading day. We've got a bid back under us. It is wicked out there, people. Don't be surprised to see even more sell-side activity come in even after the bell. But the volatility futures that you want to focus on, and again, we start talking about contango and backwardation. This is alarming to me. What's alarming? Look at the 35-day volatility futures versus the 70-day volatility futures. All right, what do you got? All right, we haven't gone in a full-fledged backwardation. What I'm actually kind of proclaiming over here is you want to see 35-day volatility, literally spike above. Like you want to see that 5-day volatility up to 27, maybe the back month volatility at like 26.50. And you want to see the volatility futures invert, because that effectively means, all right, it is on. And when I say that, there's no way. I was just a moment ago showing you that the correlation is rather high over here, but the volatility futures tell a very different story. The volatility futures are almost like, yeah, whatever. Okay, I mean, they're literally kind of, looking at the selling, staring it in the face and kind of, I've seen worse. That is very, very disconcerting. You can see the 70-day, 98-day, about 126-day, those kind of flattened out. But if you looked at the volatility skew, it's still somewhat like this. You would expect at this point with some sell-side activity, the volatility futures to have flipped over. So I'm going to warn you right now. If you're sitting there high-fiving, all right, we're going to get a bounce over here. It's possible, it's plausible, but I'm going to tell you, until those volatility futures start to invert, yeah, this could actually be a rough road ahead of us. All right, spinning around now, something I do each and every Wednesday to look at what we term expected move. Expected move is of critical importance. Why? We are way outside, people. All right, I would have a hard time actually believing that we're coming back inside the expected move. This week actually started with none other than, here's the closing bell. S&Ps will close down just approximately 90 handles on the trading session. Nevertheless, the futures contracts are still open 15 minutes after the closing bell. As I was actually kind of saying here specifically about the SPX, $61 expected move is what we had. And this is something I've been talking about, talked about it on Monday as well. $61, all right? And when I say $61, listen, you're looking for a $61 move. And again, it's a $61 move higher or a $61 move lower. Where are we right now? We're literally, more than a hop, skip, and a jump outside of that. And again, one of the more perplexing things to people that you don't see too often is look at the options that literally have 2 days left to live. We're up to an $80 expected move. So all of a sudden, you start the week with a $61 expected move, right? More than half the week is gone. Just for Thursday and Friday now, we're looking at an $80 expected move. Helmets on. Okay, it's difficult for me to believe that we're actually going to rally back up to the edge of the expected move. Again, that upper edge of the expected move sits roughly on what? 4170. It's 110 handles higher. If you're kind of curious, again, how far outside the expected move happens to be, well, it's a great way to look at it. You're supposed to be on the edge over here, which is roughly 4170. You're already 110 points below that. Okay, so you're right on the cusp between, again, a 1 standard deviation move is roughly a 60-point move. 2 deviation move, all right, would be another 60 points below that. So effectively, what are we looking at? We're in 3 deviation territory. So that is how statistically significant if you will, this particular move happens to be. And one thing I like to try to quantify, I mean, that's kind of what quants do, is how significant any given move is. Given the fact that this is only Wednesday, should we expect a bounce? Of course. But right now, okay, you can't sit here and try to bank on it. There's too much at risk, and you have too many players in the game that are looking for the same bounce as you. Now, another area to kind of quantify happens to be the QQQ. If I bring up the QQQ and I apply auto expected moves, again, you're in 3 sigma territory there. Then we have to cruise over to the financials. They finally just cracked outside the edge of their expected move. Other sectors that are just getting crushed out here, check out XHB. It's a long time coming. You're 4 standard deviations outside expected move in there. But with all this being said, right? If you're sitting there and you're like, well, what can I do? Where can I go? What am I going to do? First of all, the sale of premium is getting quite juicy, okay? But for those of you that are a little bit more directionally biased, directionally oriented, I'll give you an idea. There are stocks that are still literally 1 or 2 days removed, okay, from recent highs. Can't even say all-time highs, but some of the financials are performing extraordinarily well in the face of adversity. When this marketplace, and if this marketplace really starts to kick into high gear, all right, in terms of sell side activity, you would have to actually consider that products like Wells Fargo, okay, Citi, Citi is literally like, again, like a day or two removed from an all-time high. Well, apologize, I should not call it an all-time high, because if you do look back, there was a little issue after the financial crisis. Recent highs though, okay, so we're only like a day removed from that. This is where we would expect some heavier sell side activity to start to grow and become a little bit more persistent. The energy sector has been a bit more resilient. Today saw some sell side activity, but it's financials that I would actually have my focus on in the days to come here. Again, specific, if you believe that the marketplace will continue to see some sell side activity, come out there and again, shorting some of the financials, short what's strong. What's weak right now? Well, most of the technology stocks. It's downright ugly. If we're going to bounce, if you're looking for a bounce, okay, here's your product right here, something along the lines of Intel. Hasn't had really an uptick since its most recent earnings, okay, down dramatically from the 64 handle all the way to 53 on a percentage basis. It is downright ugly out there, folks. Listen, keep your hands and feet inside of the vehicle at all times. If you are going to sell premium in this marketplace, you best have a hedge on, okay? We've actually rolled some of our VIX hedges today. Specifically, again, I rolled a number of VIX hedges out today. So now we're protected all the way out into the July expiration. At the exact same time, went out there and sold decent amounts of premium. It's a good day if you're selling some volatility. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.